Well, good evening, ladies and gentlemen, and a very warm welcome to the 169th Annual General Meeting of the Ipswich Building Society. It's a great pleasure to see so many members here this evening. Well, the formal part of the evening is the Annual General Meeting, the occasion each year when we meet with you, our members, present to you the report and accounts, and ask your approval for these, and also for the appointment and, if necessary, the reappointment of directors. And we also ask for your approval for the remuneration report as well. We've received apologies from 7 members. Rebecca, thank you. I don't propose to read out the names, but that list can be inspected after the meeting. The minutes of the Annual General Meeting held on the 28th of March 2018 have been read and signed by me as the chairman of that meeting. Now, it's normal for these to be taken as read, but if anyone would like them read, could you please indicate now? Now, my reflections on the Society and its performance for the year ending 30th of November 2018. Last year was again a year combining change with uncertainty, all underpinned by the need to plan and report to our regulators on our preparations for Brexit. How this key change will play out is, of course, still today unknown, but I think the point to make here is that through all this change and uncertainty, the Society remains committed to providing long-term sustainable value to members through competitively priced savings and mortgage products. Each year we aim to earn sufficient profit to ensure that we have the capital that we need to sustain and grow the business. And I'm therefore pleased to report that our profit before tax for the year ending November 2018 was £3.3 million. And of course our business model using this capital remains very straightforward. And in the year, despite an increasingly price competitive market, we continued to grow both our mortgage and our savings books. We achieved this whilst maintaining our risk appetite, as demonstrated by our pleasing low level of arrears. Our new business support from our key intermediaries, particularly those in our prestige panel, was again central to our business success. I'd like to say thank you to all of those key partners for their contributions. The ongoing development of our broker portal continues to facilitate a more efficient transactional model for them, and I'm delighted that our broker satisfaction rating was 87%, up from 82% last year. Now, looking at the results overall, I think especially worthy of mention are these key features. First of all, savings balances. These increased by £5 million, taking overall deposits to a record-breaking £572 million. More targeted new mortgage business and a customer-focused retention strategy delivered an increase in lending of £15 million, and a stable net interest margin on a total book which ended the year on £536 million. And our focus on quality member outcomes was reflected in some very high member satisfaction levels, which Richard will tell you more about later. And then an excellent arrears performance. Only 111 accounts were in arrears at year end, and that represented just 2.8% of our overall book of business. And then finally, and very importantly, a significantly improved capital strength and a consistently high liquidity position, which was maintained across 2017 and 2018. The Society's leverage ratio has been improved at 4.9%, and the liquidity coverage ratio at 225% remains considerably above the minimum requirement. But if I just look ahead now, there are a number of factors which could exert pressure on the Society's net interest margin. Towards the end of 2018, it was clear that price competition within the mortgage market was increasing. This, linked to the continuing low base rate environment, does create an industry-wide pressure on margins. And I have to say there are also early signs of increased price competition for savings as well. These reflect perhaps a slowdown in the UK savings market and the ending of what the government call the term funding scheme. So, although the Society's simple operating model exists and we have a high-quality loan book which improves our resilience to these and other risks, they are nevertheless at the front of our thoughts, and additional business controls and monitoring are being put in place to enhance board and management oversight. The board structures, oversight of controls and information are at the heart of our governance. During the year, we were pleased to be able to share with the Prudential Regulation Authority, who are our main regulator, a new board effectiveness review. This expert review was conducted externally and highlighted the strengths of our current governance. But it also gave us a number of very helpful ideas to further improve and modernise what we do. Now, underpinning the board's oversight is our enterprise risk management framework. This was initiated in 2017, and a new suite of risk management tools were fully embedded during last year. These are now at the heart of our decision making. And I think this is especially important as in these challenging times, with threats to all businesses growing, especially from things like fraud and cyber attack, we need this robust and structured approach to minimising and managing risk. We are building new resilience and recovery mechanisms to ensure that we can maintain customer service in even the most difficult of circumstances. Now, the board itself has changed during 2018. Earlier in the year, we appointed to the board our Finance Director, Trevor Slater, who was introduced to the AGM last year, and also our Operations Director, Ian Brighton. And then to further strengthen our governance, in November, we were delighted to welcome Fiona Ryder to the board as a new non-executive director. Fiona, who lives locally in Bromfield, brings over 25 years' experience across the broadcasting, digital and commercial sectors. And finally, we say goodbye this evening to our Senior Independent Director and longest-serving board member, Michelle Tennant. She joined the board in November 2006, and she's been a valued colleague to society executives and non-executives alike. Professional and compassionate approach to business marketing has helped shape the modern Ipswich, and she has been instrumental in helping the society to maintain strong values and its approach to mutuality. Michelle, we are grateful for your many and varied contributions to the society, and whilst we'll miss you, we wish you well with all your future plans. Thank you, Michelle. I commend the annual report and accounts to you. But before asking you to vote on our various resolutions, I'd just like to review members' questions for the AGM. We've had 16 questions in writing, plus one which I have from this evening, which I'll come back to in a moment. All of these have had individual replies already, all bar the last two that came in, and those replies will be posted tomorrow. We're also going to post all of the questions and answers on the website. So I've reviewed all the questions so far, and there's some great ones in there, but there are some key themes that I'm just going to pick up on now and try to summarise the answers that we've given. I thought that would be the better way to do it. The first theme relates to mortgage intermediaries or mortgage brokers, depending on what you call them. We've highlighted in the report and accounts that last year, some 82% of all of our mortgages were arranged by these intermediaries. And we talked about improving the customer proposition or the broker proposition for these intermediaries. So that's really what the question was all about. So firstly, a little bit of background. The Financial Conduct Authority confirmed that there are, believe it or not, something like 50,000 regulated mortgage advisors in the UK. And depending on which statistics you look at, they write about 70 to 80% of all new lending in the UK. So they're pretty important to the market, and they're also pretty important to the Ipswich as well. Now, our improved proposition is all about improving service levels and turnaround times, increasing staff resources in our intermediary sales team, and also improving access to underwriters for our bespoke underwriting. Our broker portal is also an important part of that proposition. Now, we don't pay an increased level of what they call procuration fees to mortgage intermediaries, and we do look at who we partner with really carefully. We need them to understand the society, and we need to understand them and their business models as well. And just a little bit of an advert here, we do of course have a brilliant team of local mortgage advisors who work directly with local customers as well. It's a really important area of business for us in addition to what we write with intermediaries. So it's something that we really would like to expand further as well. Another series of questions is all around the theme of remuneration and pensions. Well, we've been able to explain that we benchmark salaries for everyone from the CEO and the executive team and also throughout the society, including keeping the annual bonus scheme both practical and in keeping with our values and objectives. The same applies to our pension schemes, and the contributions made for staff exactly the same. Contributions are usually driven by length of service as well as the grade of the staff, and the same for the executive team. So although the higher contributions are clearly for senior staff, percentages vary throughout the team, and we've gone into a little bit more detail of that in the answer that we've given the individual who's asked this question. And I think overall what you need to know is that REMCO are comfortable that our overall remuneration and pension packages consistently apply the policies that the board have signed off and are in line with the values of the Ipswich. The next series of questions was all about technology, and really asks about what we're doing about the new areas of open banking and the rise of what are known as the fintechs. These new developments are already changing and will change in the future the way in which lots of business is done, changing the model it's called. It will transform the way building societies work. So what about us? Well, we are determined to invest and to deliver to members' needs and deliver things online, but we're determined to do it and not lose the personal service which makes us so special in our local communities. That'll be quite a trick to pull off, but that's very much our strategic aim at the moment. This is probably our biggest current project and also our biggest challenge as well. Right, there's also been a question about what we call in the accounts mortgage impairments. Now, a detailed reply has been given to this individual, but this is really, for the purpose of the AGM, all about accounts that might go into arrears and are probably 3 months overdue. We allow, or in the technical language of the accountants, we provision for these, and this provision changes year on year, and last year it reduced by some £200,000. This is good, but there are lots of moving parts in setting in this provision, and it sometimes can move the other way as well, and if you look back, it has moved the other way in different reporting accounts. Things could change. For example, house prices might change, or arrears might increase or decrease. But the real message behind the more detailed reply that you'll read online is that our book of mortgage business is in good shape and is performing well, hence some of the profit figures that we've seen. There is one question. It's a question about our computer system and problems with handling checks. So rather than go into any details about the problems of our scanning system for checks, the best person to answer this question or to deal with any new issue that we don't know about is Chris. And if there's anything new in here, Chris, can you make sure that we know about it, and then we will see it at the next board meeting. Thanks very much. The final group of questions is about Brexit. The worry from some members is clearly about house price falls, and inevitably that would be the case. Now, there is no doubt that the current uncertainty has affected prices in some areas already. But there is no indication that this will happen and be maintained post-Brexit. In fact, economic commentators have really got very mixed views on this, if you've been reading about it. And I think it really all depends on the type of Brexit that we have. I just think that a lot of worry will dispel when some sort of certainty returns to politics generally. Now, whether it happened today or not, I suspect it hasn't, but that's what's going to be needed. But what you need to think about in the context of your society for Brexit is to explain that the Bank of England have already asked that all financial institutions, including the Ipswich, that we ready themselves for what they call a difficult Brexit. That means a hard Brexit, I guess. And as part of our capital planning, we've conducted a number of scenario tests throughout the business, and this has included testing the impact of severe and prolonged declines in house prices across all regions, sort of an Armageddon scenario, if you like. And what I'm pleased to tell you is that the results demonstrated that this society has sufficient capital resources to withstand even those extreme scenarios. So fingers crossed it doesn't happen, but we've got the capital and we've got the strength to actually withstand all of that. Okay, can I move into the formal business of the AGM now, the resolutions? Item 1, first of all, is to receive the report of the directors, the annual accounts and the auditor's report. I therefore propose that the director's report, the annual accounts and the auditor's report are received. Item 2 is to approve the director's remuneration report. This report is included at page 22 of the annual report and was also included in the review of the year, which was sent to members with the notice of this AGM. The report sets out our approach to remuneration of our executive and non-executive directors, and there have been no substantive changes to our approach this year. Non-executive directors receive a basic fee with a supplementary payment for holding key statutory positions, especially as chairman of a committee. Executive directors receive a basic salary, which is reviewed on an annual basis, and can also benefit from a performance-related pay scheme if set targets are achieved. Now, we're not required to seek our approval for this report, but we think it in the interest of good governance and transparency that members do have a say. So I therefore propose that the director's remuneration report is approved. Could I please have a seconder for that? Thank you very much. Item 3 is to reappoint Kpmg LLP as auditor. An annual requirement for this meeting is for you to consider, and if thought fit, to pass an ordinary resolution of the AGM to reappoint our auditors. So I therefore propose that the Society reappoints Kpmg LLP as auditor. And please could I have a seconder for that? Thank you very much. Item 4 is to elect and, if necessary, re-elect these societies' directors. Our rules require that directors appointed during the year are required to be elected by the members at the following AGM. I therefore propose that Fiona Ryder, Ian Brighton and Trevor Slater are elected as directors. And please can I have a seconder for that? Thank you very much. I'd like to announce the winner of our annual David Coe Customer Service Award. Outstanding customer service that exceeds the normal requirements of the job is what defines the winner each year of our David Coe Award. It's based on nominations from society employees and can be awarded to head office and to branch staff. It's always a tough decision, but after much consideration, I'm very pleased to announce this year's winner. This individual has been with the Society since 2012, and their role requires excellent communication, compassion, and customer focus. And it's safe to say this person has these skills in abundance, building positive relationships with customers who may be in difficult or vulnerable situations. Colleagues have described how this person's prime motivation is a positive outcome for customers, individually and collectively. This person also goes the extra mile by taking a leading role in the Society's vulnerable customer group, working hard to improve awareness across the Society as well as in their own area of business. They've also played a significant role in reducing the Society's total arrears figures to a record low and continually look to review processes and reporting to improve customer experience and outcomes. The winner also takes part in the Society's financial education programme and is a true supporter of improving financial literacy. Both the Board of Directors and I would like to thank this individual for their true dedication and commitment to providing excellent customer service. The winner of the 2019 David Coe Award is our Senior Collections Administrator, Teresa Clements.
Last year, I stood here and talked about it being a time of economic unrest. What has changed, one could ask? I'm sure we've all heard quite enough about Brexit to last a lifetime, so please forgive me for just making one small comment. Given the Society's relatively simple business model, that is, we take in money from savers and loan it out in the form of a mortgage, we do not expect to be adversely impacted by Brexit, however things may develop. Of course, we will feel the effects, but rest assured we are in a strong position and are well prepared, having carried out robust stress tests. Now let's move on to some good news. I suspect many of you in the room are savings members, so I'm sure you were pleased when the Bank of England increased base rate during the year, giving us the second successive annual upturn. There was welcome news for first-time buyers too, delivered in the autumn budget. This saw the abolition of stamp duty for purchases up to £500,000 for shared ownership properties, which is a part-buy, part-rent scheme where we actively lend and work closely with housing associations to help would-be first-time buyers trying to get a first step on the housing ladder. These are often young professionals faced with high house prices, especially in London and the South East. A further £500 million was promised by the government for the Housing Infrastructure Fund, for local councils to apply for cash to help them build new homes, and the Help to Buy scheme was extended for 2 years. All positive steps to help people become homeowners, I'm sure you'll agree. We're keen to play our part in this too. We work to increase access to the mortgage market by employing an expert manual approach to underwriting. This means we can understand the personal circumstances behind each applicant, taking their individual situations, lifestyles and income into account when deciding whether to lend or not. It is this informed, risk-based approach which allows us to innovate with our lending. In 2018, we introduced a new range of mortgages specifically designed for borrowers aged 50 and over, where, more often than not, loans are carried into retirement. We offer no maximum age restriction at the end of the mortgage deal, and our individual underwriting can take into account changing sources of income and lifestyle. For those seeking more control over their next house move, we have been lending on a self-build basis for several years. This helps people who are embarking on a new project or who may be converting, renovating, or even knocking down and rebuilding a property. Last year, we strengthened this offering by considering the use of modern methods of construction, which, for example, can take the form of off-site construction of prefabricated panels, which are then assembled on-site. Of course, once the build is completed, the existing owners or next buyers of such property may need to borrow a standard mortgage funds, and I'm pleased we are able to help on this basis too. We remain committed to offering access to our mortgage services both directly through our own mortgage consultants and through a network of mortgage intermediaries. And last year, our broker partners accounted for 82% of our mortgage business. Direct applicants can have either a face-to-face or telephone service with our consultants who are based at our Ipswich head office. We firmly believe in offering a face-to-face service to savings members too, and demand for this led us to open 2 new and improved premises last year in our existing branch towns of Ipswich and Woodbridge. If you have yet to visit our new-lit branches, please do call in. It is especially good news that we have been able to open these premises at a time when other providers have been closing branches. We are now the last financial services provider in the towns of Aldeburgh and Halesworth, following the decisions by other institutions to close. To help address some of the impact faced by the residents in Aldeburgh, we have this month embarked on a trial period of longer opening hours in the town. We know that many people do like to have access to their funds online as well as visiting our branch locations. To address this, we have been preparing for a complementary digital channel to enable members better access to our savings services, which will be open banking ready and prepare us for members to have greater financial transparency if they so choose. This work is at an early stage, but remains a priority, and will see us invest in strengthening both our technology and our people. In addition to our branch network, another way we engage with members is through our All-In programme. This was designed to make membership meaningful and not just about a transactional relationship. No doubt you are also here this evening to hear from our guest speaker, Tracy McLeod, as part of our biggest member event of the year. Last year, thanks to you, we achieved the largest AGM turnout of all UK building societies. Quite some feat, I'm sure you'll agree. And outside of our AGM, our range of events welcomed 443 members to occasions ranging from a financial scam awareness workshop, our tour of the Wilkins & Sons Jam Factory in Tiptree, and a sunset Orwell River cruise to mark Suffolk Day. And thanks to the hard work and dedication of our employees, I am pleased to report that our customer satisfaction last year stood at an impressive 98.6%. And our Net Promoter Score, which is a measure of how likely our members are to recommend us, was 83, and this is an exceptional score for a financial services organisation. Of course, while we are in financial services, we are also a mutual organisation, and this means we don't have shareholders, but we are owned by you, our members. And by using your vote tonight at our AGM, you can have a say in how we are run. We think that as a mutual, we have responsibility to our communities and the high streets and thoroughfares in which we operate. And you may already be familiar with some of the ways we do this, such as through volunteering and financial education. Some 836 staff hours were spent getting hands-on at charities or community groups in 2018, with 53 employees taking part. And as part of this, I spent half a day with Active Lives Community Gardens in Ipswich, along with several members of the senior management team. Other charities to have benefited from our staff time include Halesworth Volunteer Centre, Suffolk Befriending Scheme, and Reach Community Projects in Haverhill, just to mention a few. We have also been active in the classrooms of Suffolk, taking our financial education programmes to primary schools, secondary schools, colleges and prisons. During the year, this added up to 515 staff hours spent delivering what we believe is a key life skill. There was also considerable financial support given to charitable and community organisations. We have dedicated savings accounts which support local charities and resulted in a bonus payment from the Society, not from member funds held with us, of some £30,000. Alongside this, we supported members of staff through our matched funding scheme. This doubles the personal fundraising efforts of our employees and saw an additional £12,000 go to charities including Suffolk Mind, Families in Need and Ipswich Hospital's Somersham Ward Cancer Support Group. We know how important it is that our employees are supported and motivated during their time with the Society. And it is this which makes us successful and means our members get great service. And I would like to take this opportunity to thank our employees for their hard work and dedication throughout the year. To help us measure our staff satisfaction levels, we introduced a new tool in 2018 which enables us to monitor employee engagement. In the year, we consecutively increased our engagement score in each quarter. Another feature of the tool is the ability to invite suggestions on how to improve the Society as an employer, which is anonymous and confidential. And thanks to staff suggestions, we have implemented several actions, such as improved ways of recognising colleagues, a core hours working policy, and increased visibility of our senior leadership team in head office and in the branches. I would like to add that in 2018, we joined the Women in Finance Charter. This is a government-led movement which asks firms to pledge to build a more balanced and fair industry. And in signing up, we made 5 commitments, including actions such as unconscious bias training for recruiting managers. The Society is now in its 170th year, and we have come a long way since the early days of the Ipswich and Suffolk Freehold Land Society. And I, along with the Society's board, believe we are in a good position to continue to operate sustainably, and would like to thank you, our members, for continuing to support us and for your continuing membership.
Votes and results from this evening. The first resolution, which was to receive the report of the directors, the annual accounts and the auditor's report, we had 3,514 votes for and 39 against. The second resolution, to approve the directors' remuneration report, we had 3,244 votes for and 261 votes against. The third resolution, to reappoint Kpmg as auditors, 3,362 votes for and 171 votes against. The election of directors, we had 3 directors up for election. So to elect Ian Brighton, 3,438 for and 96 against. To elect Fiona Ryder, 3,400 for and 134 against. And finally, to elect Trevor Slater, 3,414 for votes and 117 against.
I declare Kpmg LLP duly reappointed as the Society's auditor. I also declare that Fiona Ryder, Ian Brighton and Trevor Slater are duly elected as directors of the Society. All of these results will be available on our website from tomorrow. Thank you for your attendance and your attention. I will now formally close the annual general meeting.